Hi, and welcome to Sanford's fourth Software and Internet Monthly Market Report for 2023. And as usual, we're going to be going through the previous month's M&A and venture capital activity across the entire technology landscape. So let's dive in on the M&A front. So in April 2023, there were a number of notable M&A deals that really dominated the landscape. In particular, there was Grayshift, which I believe is a Thoma Bravo portfolio company. They acquired Magnet Forensics for about 1.3 billion, and that was done at a 12 times revenue multiple. And Magnet Forensics was a publicly traded TSX company, so a good one here in Canada. Another big one was also WiseTech's 414 million acquisition of supply chain visibility player Bloom Global. No multiples were disclosed on that, unfortunately. In summary, though, we saw about $2.2 billion of invested in April, 95 transactions, and a median revenue multiple of about 6.4 times revenue, which was a slight correction above previous months this year. Moving on to yearly deal volume and dollars invested. So 2023 is still tracking considerably below 2022 figures. Deal volume's down about 34%. Dollars invested is down about 75%. It's still pretty early in the year, though, and a lot could change, although there still also remains a lot of macro uncertainty, particularly with the news of SVB and some of the other bank failures. So there's still a lot of things that can develop this year. And then looking at M&A multiples, so the median revenue multiple for Q2 2023 improved slightly relative to last quarter. We're still seeing a lot of price compression at the top end of the spectrum, and we've talked about this previously, as less and less of these software companies are getting those outsized double-digit ARR multiples. They still happen, but definitely not as frequently as before. And you can kind of see that in some of the price compression when you look at the 75th percentile multiples in the last 4 quarters. All right, so moving on to SaaS versus non-SaaS multiples. So these multiples have tightened quite a bit in recent periods, and even at one point in the year, we saw them invert, which we haven't really seen in prior periods. Non-SaaS multiples have definitely been trading well relative to how they have historically, and have been having a lot less volatility relative to SaaS multiples. It's an interesting trend that we've talked about in previous reports, and part of this could be due to buyers seeing value in converting a non-SaaS company to a SaaS company and realizing a revenue uplift from that. And like I said, we've talked about this in previous reports. And then from an overall deal volume perspective, we did hit a new low in March 2023 with 75 deals, but we bounced back in April with about 95 deals. It's likely deal volume is going to stay somewhere in and around this level until we see some changes in interest rates and some of this, I would say, uncertainty in the broader macro environment. So that wraps things up for the M&A side. So we'll switch gears to the venture capital side of things. In terms of how April 2023 did, from an investment perspective, we saw over $3 billion invested for the month, a median deal size of 3.2 million, and over 380 VC transactions for the month. The most notable was Packet Fabric's 373 million raise, which was led by Exponential Partners. And then looking at monthly deal volume, we saw a slight uptick in deal volume in April relative to March, and that was similar to M&A. However, with rising rates and continued macro tailwinds, we are seeing the VC market tighten generally, and this has been consistent with a lot of the VCs that we're discussing with on a regular basis. They're just being much, much more selective with the type of investments that they're doing right now. And then moving on to yearly deal volume and dollars invested, like 2023, or like M&A, 2023 is tracking considerably below 2022 figures. Deal volume's down about 35%, while dollars invested is down about 33%. Still early in the year, though, and a lot could change, but I'll just echo some of the commentary that I made on the M&A side of things. So the last point to hit home on is just really the sharp decline in VC valuations. And we've been talking about this consistently in prior reports as they've been sharply declining across all stages. from the elevated levels that we obviously saw in 2022. If we look at early stage, for an example, they're down 26% year over year, mid stage is down 43% year over year, and late stage is down about 41% year over year. So raising venture capital has obviously become a lot more challenging in 2023 than it was in 2022, 2021, 2020. And I think a lot of folks will agree with that. It's also become a lot more dilutive this year as well. And that's a wrap for this month's Software and Internet Monthly Market Report. If you'd like to get added to our mailing list, don't hesitate to reach out through the website. Thank you.